Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Hello, everyone, and thanks for joining us again. Today, we're going to really get into it, taking a close look at the latest from, well, Apple. We're breaking down their Q3 2025 earnings call. It's always a key moment, that mid-year check-in. Gives you a direct line into how Apple's leadership views things. So our mission today is to kind of cut through all the jargon, pull out the really important insights, figure out what it all means, whether you're, a big Apple fan, an investor, or just interested in how these tech giants operate. It's a pretty unique chance to hear about their recent performance, strategic changes, and what's next, especially around AI, which seems to be everywhere right now.
Yeah.
Exactly. Yeah, an earnings call like this, especially for Apple, it's not just about the raw numbers. It's a much broader look under the hood, so to
Yeah.
speak. You get insights into their product strategy, how they're handling the global economy, their sort of long-term vision. And this Q3 call, it was pretty revealing, set the stage for some pretty significant themes. We saw really strong revenue growth, which says a lot about their market strength, even now. There was also a very clear focus on AI, seems to be accelerating, becoming a real cornerstone for them. And we also got some interesting bits about their supply chain, how that's evolving with trade policies and, their big investments, especially here in the U.S.
Right. Speaking of that strong growth, let's jump right into those headline numbers. They really do grab your attention. Apple reported a June quarter revenue record, $94 billion. Just wow. And that's not just a big number. It's up 10% year over year. And Apple apparently beat their own expectations too. And the bottom line kept pace. EPS, also a June quarter record on $1.57. And that's up 12% from last year. I mean, those are really strong numbers, especially when you hear about headwinds elsewhere. So what's the bigger picture here? Does this suggest Apple's kind of immune, or is there more to it?
That's the key question, isn't it? And these record figures, they don't just signal strength, they almost show this surprising resilience in a tricky global economy. You see other companies struggling with inflation, rates, supply chains, but Apple seems to just power through. It suggests their premium position in that ecosystem act like a buffer, hitting records across revenue, EPS, different products. It points to fundamental strength, not just a lucky quarter. And the better than expected part could be they were being cautious with guidance, or maybe the market was a bit better than they thought. Either way, it's a positive signal, shows real persistent demand. And what's really striking, maybe more telling, is how widespread it was. Growth accelerated globally, strong performance in Greater China, always one to watch, and lots of emerging markets too. They actually hit June quarter revenue records in, what was it, over 24 countries and regions?
24. Wow.
Yeah. Places like the US, Canada, Latin America, Western Europe, Middle East, India, South Asia. It's pretty diverse. That kind of geographic spread really highlights their market reach and, the brand's appeal. Shows they're finding new customers and keeping old ones pretty much everywhere.
That global reach is impressive, yeah?
Yeah.
Okay, let's shift gears to the next really big topic. Clearly a huge focus on the call, AI. The CEO called it one of the most profound technologies of our lifetime. Pretty strong words. We heard about AI being embedded across devices, platforms, and they're really ramping up investment. They talked about Apple Intelligence, features visual intelligence, the cleanup tool for photos, writing tools, and hinting at more personalized Siri next year. So Apple usually polishes tech. They aren't always first. What's their core AI play here? How are they making it, uniquely Apple and not just catching up?
Right. It's clear AI isn't just an add-on for them. It's being woven into the fabric of everything they do, their stated strategy. Taking the most advanced technologies and making them easy to use and accessible for everyone. That's classic Apple, isn't it? Focus on the user experience, make it intuitive. So for AI, it means features that are deeply personal, crucially private, and just seamlessly there when you need them, almost invisible sometimes.
Stealth AI, I like that.
Kind of, yeah. And technically, the foundation is Apple Silicon, their own chips. That's key. It lets a lot of this run right on your device, faster, more private. For the really heavy lifting, things the device can't handle, they use this private cloud compute architecture. Think of it as their own secure, specialized cloud just for complex AI tasks. It's designed to protect user privacy rigorously. Encryption, anonymization, a big differentiator from how others might handle cloud AI. This hybrid approach on device plus private cloud lets them scale without sacrificing privacy principles.
Just makes sense. Privacy is a huge selling point for them.
Absolutely. And you see the momentum building, the developer betas for iOS 26, Mac OS 26, iPad OS 26, apparently the most popular betas they've ever had. That tells you developers are eager to build on this new platform, crucial for future apps and innovation using Apple Intelligence. And connecting this back to the financials, you see it in their CapEx, their capital expenditure. The CFO was explicit. AI investments are a significant driver of increased spending. That means money pouring into facilities, equipment, and especially those massive data centers needed for AI. It's a mix of their own and third-party centers, allowing them to scale up fast, a huge long-term bet.
Okay, a really integrated privacy-first AI strategy. Let's zoom in now on the products themselves, the engines driving all this, right? Starting with the star, iPhone. Revenue hit $44.6 billion. That's up 13% year over year. And a June quarter record for upgraders. That seems important. They also called out strong double-digit growth for the iPhone 16 family compared to the 15. So what's keeping iPhone demand so strong? What are the features pulling in those upgraders?
Yeah, the iPhone performance was just solid across the board, growth in every geographic segment, which is pretty amazing for a product this mature. And, they just passed a massive milestone. Shipped the 3 billionth iPhone since 2007.
3 billion, that's hard to even comprehend.
Right. It shows how central it's become.
Yeah.
As for the iPhone 16 family's appeal, it's a mix of things. The Pro models have that new A18 Pro chip. It's not just speed, it's powering that on-device AI we talked about. Think editing photos with AI cleanup instantly. Or the camera optimizing itself, all happening on the phone. Plus, you've got the Pro camera features, always pushing boundaries. And on the 16E, breakthrough battery life and that clever 2-in-1 camera system.
And iOS 26 is adding more on top of that.
Exactly. Beyond the new design and Apple Intelligence, you get practical stuff like call screening, hold assist in the phone app, smarter messaging using AI, live translation right on the device. It all adds up to a smarter, more personal experience. That continuous hardware and software innovation, tightly linked, that's what drives upgrades and pulls in new users, making the phone even more essential.
Makes sense. Okay, moving over to the Mac, another strong showing. $8 billion in revenue, up 15%, mostly driven by the M4 MacBook Air. Again, a June quarter record for Mac upgraders, plus strong growth in emerging markets. Feels like the Mac is really having a moment. What's fueling this?
It really is. And the core reason, Apple Silicon. The transition away from Intel chips has been a massive success. The whole portfolio is doing well. The M4 Air, which they call the world's most popular laptop, the Mac Mini, the MacBook Pro line. The performance and efficiency gains are undeniable. Pros love the power for video editing, coding, but regular users feel the difference too. It's just snappier, lasts longer on battery.
And the software updates are helping too. macOS Tahoe.
Definitely. macOS and Tahoe 26 bring some nice improvements. Better phone integration for calls on your desktop, live activity showing up right there, and a big update to Spotlight, making it more like an AI assistant for finding things, launching apps, quick calculations. It keeps the platform feeling fresh and capable. Combine that software refinement with the Silicon's power. It's a compelling package, attracting new users, especially in emerging markets, and convincing existing users it's time to upgrade.
Got it. Now let's touch on iPad. Revenue was $6.6 billion, down 8% year over year. They called it a difficult compare. But over half of buyers were new to iPad. Can you unpack that difficult compare and talk about what's next for iPad?
Yeah, the difficult compare is pretty standard in tech. It just means last year's June quarter had unusually high sales because of, say, a big new iPad Air or Pro launch. So this year's numbers look lower in comparison, even if underlying demand is okay. It's like comparing your spending this month to the month you bought a new appliance,
Right, the baseline was higher last year.
Exactly. So that 8% drop isn't necessarily alarming on its own. And the really important stat, I think, is that over half the buyers were new to iPad. That means they're still growing the user base, pulling people into that form factor. Looking ahead, the big story is iPad OS 26. They're hyping it as the biggest iPad software update ever.
Biggest ever. What does that mean?
Well, the key thing seems to be a new intuitive windowing system, giving you more control, making it feel more like a flexible computer, bridging that gap between tablet and laptop, plus an enhanced Files app for better organization. These kinds of fundamental software changes can really revitalize the hardware and make it more appealing. So even with the dip this quarter, the software roadmap looks promising for future growth.
Okay, that makes sense. And finally, in the product roundup, wearables, home, and accessories. $7.4 billion revenue, down 9%, also hit by difficult compares. But it was the 10-year anniversary of Apple Watch, and it set a June quarter record for upgraders. What else stood out here? How do these fit into the bigger picture, like health and spatial computing?
Yeah, similar difficult compare story here, often tied to accessory launches with new iPhones or iPads in the previous year. But like you said, the Apple Watch milestone and upgrade records show underlying strength. watchOS 26 is bringing smarter updates, a fresh design, keeping it the leader in health and fitness. It's become so much more than a watch. It's a health device for many.
And Vision Pro fits in this category too, right? Still early days there.
Right, still very early, but clearly crucial for their future spatial computing ambitions. visionOS 26 adds things like spatial widgets, letting you place digital info in your physical space, more lifelike personas for virtual meetings, and significantly, new enterprise APIs. They highlighted CAE, the pilot training company, using Vision Pro for immersive training. That shows a real push into professional uses, not just consumer stuff.
Interesting. So enterprise adoption is a focus for Vision Pro.
Seems like it. And even AirPods are getting updates, studio quality audio recording, which is pretty amazing for earbuds, and using them as a camera remote. Little innovations that add up. And overarching all this is that health and safety commitment. Hearing health alerts for AirPods, fall detection on watch, irregular rhythm notifications, these features have real, sometimes life-saving impact.
And the customer satisfaction numbers were high across the board again.
Incredibly high. 98% for iPhone, 97% Mac, 98% iPad, 97% watch. That kind of loyalty, plus growing installed bases. It's a powerful combination. Suggests users stick around and buy more Apple gear. A real virtuous cycle.
Definitely a strong foundation.
Eh.
Okay, let's pivot to services. Just an absolute juggernaut. All-time record revenue, $27.4 billion, up 13% year-on-year. Strength everywhere, developed and emerging markets, acceleration in things like cloud services. What's driving this consistent monster growth? How do they keep it going?
Services is just, a cornerstone. High margins, recurring revenue. It's beautiful from a business perspective. Several things are driving it. Apple TV Plus is a big one, gaining real traction both critically and with viewers. Record 81 Emmy nominations this quarter. Shows like Severance, The Studio racking them up. Over 585 wins total now. That quality drives double-digit viewership growth.
So the content investment is paying off.
Seems like it. And they're branching out, like with the F1 movie in theaters. Plus, Apple Music hit its 10-year anniversary, adding new features like auto mix, lyrics translation, that new LA studio space, keeping it fresh. The App Store, still growing double digits. June quarter record there, too. Remains that central, trusted marketplace for apps on iOS. But crucially, it's about engagement. More people are transacting, more people are paying for subscriptions. Both hit all-time highs. Paid accounts grew double digits. And the big number, well over 1 billion paid subscriptions across all their services.
$1 billion. Wow.
Yeah, it's staggering. Shows the scale of that recurring revenue. Then you add new things like the Apple Games app, expanding tap to pay and wallet. It all makes the ecosystem stickier, more valuable.
And enterprises using services more too.
Absolutely. PayPal, Roche deploying Macs, Siam Commercial Bank in Thailand using thousands of iPads, CAE using Vision Pro, as we mentioned. It shows the ecosystem's value extends well beyond just consumers. It's a really diverse base fueling that services growth.
Impressive diversification.
Yeah.
But you do wonder, with subscription fatigue and maybe regulatory pressure on the App Store, can they keep that pace up indefinitely?
Okay, beyond products and services, they talked about broader strategic investments and their global footprint. Retail expanding online in Saudi Arabia, new stores coming in UAE, India, another one in Osaka, and emphasizing values, accessibility features, magnifier for Mac, new Braille stuff. What do these broader moves tell us? That's a fair question on services fatigue, but so far, the numbers are holding strong. These strategic investments, though, they show the really long-term thinking. Retail expansion in places like Saudi Arabia, UAE, India. That's about tapping into future growth, establishing a presence where the market is still expanding. Osaka reinforces a key developed market, but the other investments are maybe even more strategic. That $500 million commitment with MP Materials, that's about securing recycled rare earth materials in the U.S.
Ah, so that's a supply chain security play.
Exactly. Rare earths are critical for magnets and everything. This reduces reliance on other countries, shores up the U.S. supply chain for vital components. It's smart, less risky long term. Plus, the new Apple Manufacturing Academy in Detroit, directly investing in U.S. manufacturing skills. It's all part of that massive $500 billion U.S. investment commitment over the next 4 years, driving innovation in manufacturing, silicon design, AI, right here.
So really bringing more key parts of the process back to the U.S.
That's the clear strategy, doing more in this country, as they put it. Building ships in Arizona, semiconductors across 12 states, sourcing glass domestically. It's about de-risking the global supply chain, boosting U.S. innovation and jobs, and ensuring they have a robust manufacturing base. Very calculated move.
A major strategic shift, really. But these global operations still face hurdles. Tariffs came up again. Sounded like a significant cost. They mentioned $800 million in tariff costs in the June quarter, and the estimate for the September quarter jumps to about $1.1 billion, assuming things stay as they are. Why the big jump? And what are they doing about it?
Yeah, that jump from $800 million to potentially $1.1 billion, it's mainly down to two things. Higher sales volume overall,
Right.
and having less build-ahead inventory. Basically, as they sell more stuff in markets hit by tariffs, the total bill goes up. And they'd previously built up some stock to cushion the blow, but now they have less of that buffer, so the impact is more direct.
So how do they fight back against that cost?
It's multi-pronged. One is just constantly optimizing the supply chain, maybe shifting where things are made or assembled. The other big one is what we just talked about, investing more in the U.S. Making more components and products here directly reduces exposure to tariffs on imported goods coming into the U.S. It's a direct countermeasure.
And how does that affect where things are actually made now?
It's getting quite segmented. For iPhones sold in the U.S., most now come from India. For Mac, iPad, Watch sold in the U.S., mostly Vietnam. But for products sold outside the U.S., a lot still comes from China. So it's this ongoing diversification effort based on trade conditions.
Okay, and the outlook for next quarter, how does this all factor in?
So for the September quarter, they're guiding for total revenue growth in the mid to high single digits year over year. Services growth should be similar to Q3, still strong. Gross margin is guided between 46% and 47%. And importantly, that includes the estimated $1.1 billion tariff hit. Shows how much they're absorbing.
So the growth rate is slowing a bit from Q3's 10%. Why is that?
Couple of reasons, mostly statistical. First, there was that small 1-point demand pull forward into Q3 because of the tariff talk. That artificially boosted Q3 slightly. Second, the September quarter faces a tough compare against last year, which had the full impact of new iPad launches. So it's more about timing and comparisons than a fundamental slowdown. Oh, and foreign exchange? Pretty much no impact in Q3 and only a tiny tailwind expected for Q4. So currency isn't really muddying the waters here. It makes the tariff impact clearer.
Got it. That clarifies the outlook. Okay, let's move to the Q&A. Always interesting to hear what the analysts are digging into. First up, those upgrade rates. Analysts wanted to know, was it the cool new features, the tariff pull forward, or maybe the AI buzz driving those record iPhone, Mac, and Watch upgrades? What did Apple say was the main driver?
Yeah, they were pretty clear on this. Product strength was the #1 reason, specifically the iPhone 16 family's strong growth driving iPhone upgrades. And for Mac, the move to Apple Silicon continues to be a huge draw. They did confirm that roughly 1 point of the Q3 growth was likely pulled forward from Q4 due to tariff concerns, mainly for iPhone and Mac in the US. Some people bought early. But the big picture, strong products compelling people to upgrade.
Makes sense. Product is king. Okay, next hot topic. China. Analysts dug into that 4% growth in Greater China. Wanted to know about iPhone 16 demand there, if the trends were sustainable. What was the story on China?
Right, China's always under the microscope. The 4% growth was mainly driven by iPhone acceleration and also really strong Mac growth. They did mention government subsidies helped, and this was the first full quarter they were in effect. But lots of positive signs, too. Record installed base for all products in Greater China. Record iPhone installed base specifically. Record June quarter for iPhone upgraders in mainland China. That shows loyalty.
So iPhone is still very popular there.
Very. An outside survey had iPhone holding the top 3 spots in urban China. Pretty amazing given the competition. And for Mac, iPad, Watch, most buyers were new to the product, which is great for expansion. MacBook Air and Mac Mini were top sellers. So despite challenges, a solid quarter in China.
Good context. Okay, back to AI. Questions about confidence in the personalized Siri launch next year and the overall AI investment plan. Given Siri's past performance, let's say, this is pretty key. How are they feeling about it?
They sounded confident, said good progress is being made on personalized Siri for next year. They kept stressing the strategy, AI that's deeply personal, private, seamlessly integrated, not just a chatbot layer. They pointed to the 20-plus Apple Intelligence features already out, visual stuff, cleanup, writing tools, and emphasized again the significantly growing investment, both money and, importantly, reallocating people internally to focus on AI. It's clearly a massive priority.
Right. Now, here's a really interesting, almost philosophical question an analyst raised. With AI getting so good, could our dependence on screens actually decrease? Are phones and tablets always going to be the main way we interact? How's Apple thinking about that?
That is a fascinating long-term question, isn't it? It challenges the core of their business. Their answer was interesting. They basically highlighted just how much the iPhone does. It connects people, runs apps, games, takes amazing photos, navigates, handles money. It does so much. So their view, it's difficult to see a world where iPhone is not living in it.
So they don't see it going away.
Their thinking seems to be that while they're definitely working on other things, maybe hinting at wearables, spatial computing like Vision Pro, more ambient tech, these new devices are likely to be complementary, not substitutes. So AI and new form factors might augment the iPhone, make it even more useful rather than replace it. Integration and expansion, not obsolescence.
Interesting perspective. Okay, circling back to services, the App Store specifically. Analysts asked about performance, given the Epic court case decision and those steering dynamics. That ability for developers to point users to outside payment methods, how's that impacting things?
Yeah, that's been a big question mark. But services overall, remember, hit that $27.4 billion record, up 13%, broad-based strength. On the specific Epic steering change, they said it was only just introduced in the June quarter. But despite that, the U.S. App Store still saw double-digit growth and hit an all-time revenue record.
So no immediate negative impact visible yet.
Apparently not, at least financially in that first partial quarter. They said they'll keep monitoring it, of course, but remain committed to innovating the App Store for users and developers. So for now, it seems the App Store engine is still running strong despite the regulatory change.
Okay, good to know. And finally, M&A strategy, mergers and acquisitions, especially in AI. Are they changing their usual approach of small, targeted buys?
Nope, sounds like the strategy is holding steady. They confirmed they've bought around 7 companies this year, about one every few weeks, mostly small, focused on tech and talent. The main question they ask is, does it accelerate our roadmap? If buying a company, usually a smaller one, helps them get where they want to go faster, especially in key areas like AI, they're open to it. They aren't necessarily stuck on a certain size, but the preference is clearly for these smaller, strategic tuck-ins that they can integrate quickly. No appetite for huge, risky mega mergers, it seems. Very pragmatic.
Okay, amazing. We have covered a ton today, from Apple's really solid financials suggesting some real resilience to their deep push into integrated private AI, the constant product innovation, and those big strategic bets on diversifying supply chains and investing back in the U.S. It really feels like they're not just reacting, but actively shaping their environment, tackling challenges like tariffs head on. So as we wrap up, here's something for you, the listener, to think about. Considering Apple's deep focus on both this next wave of personalized private AI and this major push to build more critical technology within the United States, how do you see these two huge strategic directions influencing not just Apple's own future, but maybe the whole tech landscape, global supply chains, and maybe even what it means to be a global tech company going forward?
Yeah, that's a great point to ponder. And it really highlights the interconnectedness of it all, doesn't it? The strong products fuel the services growth, the AI investment enhances both hardware and software, the supply chain investments build long-term resilience, that massive installed base and the incredible customer loyalty we saw, it just signals ongoing potential across the board. Apple's clearly playing the long game here, especially with AI, trying to make that advanced tech feel personal and just work. That whole integrated approach really seems to be their defining path forward.
Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.